Okay, what's going on? Hey, how you doing? Emmett Dempsey with Geneva Financial. It's my first time doing a Zoom Facebook Live, but I wanted to put out some information today about what's going on in the mortgage market. We've had a crazy couple weeks, obviously, but today I wanted to talk about the latest and greatest about what's going on, how it affects you as a potential home buyer, or if you're refinancing and whatnot. First of all, the Federal Reserve announced their quantitative easing. You might hear the term QE. Whereas the announcement last Sunday, they had a limit on it. Whereas basically they said whatever it takes. They're going to buy as much mortgage backed securities as they need to keep rates down, which is very good for long-term rates going down. However, in my last live, I talked about the capacity issues that we are experiencing as far as processing underwriting. We're still trying to shove a lot of loans through a system that's already overburdened. So that's what's going on there. But rates definitely came down today. So things are definitely going in the right direction. Also, they came out with some guidelines for the coronavirus as far as appraisals go with Fannie Mae, whereas they don't always have to do internal inspections. They're really trying to mitigate what's going on with the coronavirus and the quarantines and things of that nature. Also, another change with the liquidity we have going on, your non-QM loans. I know I've done quite a few of them. Your one day out of short sale, bankruptcy, bank statement kind of loans. They've pretty much gone away overnight. So if you have, I know your major non-QM lenders have kind of had dried up for now until things change and settle down a little bit. A lot of your non-QM loans are really out of the market right now, and it's affected a lot of jumbo loans too. I don't do a ton of jumbo, but for folks out west in California or parts of South, in the Keys, jumbos are really getting hit right now. So, but one of the main things I want to talk about today about how, should I buy a house now? Are things okay? But let's take a look at actual data and facts about what's going on in the mortgage market, in the real estate market, about how this is not 2008. This is what I've been telling my folks. It's not 2008. Things are much different. We come into this coronavirus thing with a much stronger economy, much stronger housing market. I'm going to go over some data and do some screen share stuff and kind of walk you through it. So let's go take a look. I'm going to go here. Keeping Current Matters is a really good site that I belong to, provide some free buyer's guides, but wanted to kind of walk you through these slides here. This one slide here is about mortgage credit availability index. Basically, it shows you how many folks that are eligible for mortgage crisis, and the worry that there's a lot of bad mortgages on the marketplace is really not the case. You can see where it was back in 05, 06, where everybody was getting mortgages for low credit scores and stated income, whereas it kind of went, again, a rubber band the other way. And we've been steadily increasing. I think a lot of this increase happened with relaxing of guidelines, also some non-QM that I talked about, where it's kind of maintaining. So there's not a lot of the mortgages out there are very good mortgages. Let's look at depreciation. The 6 years leading up to the housing crash of 08, you can see it was kind of screaming on fire, 8s, 12s, 11s. And after the last 6 years, it's been pretty tepid, pretty increasing, pretty steady, whereas you don't have a lot of room to fall down. So you see we weren't on fire, and with rampant speculation, it's been pretty straight, even keel appreciation as a market should. Every realtor knows this. Months of inventory out there, whereas in 2007 we were looking at about 8 months of inventory. They were really overbuilt. As of today we're about three months. I know that's here locally. In some pockets it's actually less than that. Okay, the whole adage about using your house as an ATM, again, that's not happening during this situation. From 05 to 07, this is the billions of dollars folks are pulling out of their houses. 260, 321, 240 for almost 824 billion. The last 3 years, much less than that. So again, I know FHA lowered their max cash out to 80%. Folks are really not pulling out a bunch of equity. So people have good rates, they have good equity. So the risk factors that were happening in 08 are not happening today. This is a percent of the median income needed to purchase a home. Again, 2006, it was much higher. Today, it's much lower than what folks are using to buy a home. Again, how has the housing market been impacted by stock market crashes we've been seeing? We've seen a lot of volatility going downwards. So what's going on? Okay, this was the S&P correction from '07 to '09, 51%. The housing mortgage crash in appreciation didn't go anywhere near what the S&P did. Okay, so we had some corrections, and the '07 '08 crash, the real estate market was a real estate based recession, unlike others. I like this quote here, is that what we have in common with 9/11, it was kind of a panic driven anxiety we have going on right now. They're avoiding crowds. Same parts of the economy are affected: airlines, leisure, hospitality, and that's kind of what's going on right now. So you can see that. And also the .com 9/11 crash went down 45%. Actually, from 2000 to 2002, actually price appreciation gains. So, stock market crash doesn't mean real estate market crash. They're not correlated at all. And you can see that the data actually support that. Recession does not equal housing crisis. Yeah, we're in a recession, but it doesn't equal housing crisis. Okay. Here's another quote by Bill McBride. A sudden economic stop. It all depends on how long this is going to go on. So everyone's staying in their house, quarantined, social distancing, what have you. The faster we can get out of this, the faster we'll be done, the faster we get out of it. This is what, I think we're going to get punched in the face for a second quarter. That's just going to happen. It's going to be a steep decline, and then we're going to bounce right back, again, depending on the severity of what's going on. We don't expect a repeat of the severe recession of '08, because these are all external forces, not endemic to the financial system. Like I said, we came into this much stronger than we did before, and that's where we're at. So you can see the home price changed during the last 5 recessions, 1980, 81, 91. We've actually seen mostly increases in appreciation because there's other factors driving that, namely supply and demand. Rising number of foreclosures. They put a moratorium on some foreclosures. They're relaxing some, doing some forbearances. They're trying to make it having folks stay in their homes and providing any kind of servicing runoff and the large scale foreclosure activity to get us through this. I think we already saw that. So there's one more one I wanted to show. One of my favorite slides here is this population graph. Okay. Whereas, we talk about supply and demand, and then we go through here where we were oversupplied. Now we're nearly half the inventory. We kind of showed you that. What I like here is who buys houses? People buy houses. Okay. Well, people need to buy houses. You need the baby boomers here. And then in 2006, this big old ditch right here, that was 2006. There weren't enough 33-year-olds, and the 33-year-old is a first-time home buyer. That's the average. That's the median age of first-time home buyer. So you can see we didn't have enough people to buy the oversupply. So something had to give. Yeah, I mean, mortgages and stated income loans. Yeah, they were a contributing factor, but if we would have had more people, that probably could have gotten out of it. But you can see where the 33-year-old is today, much higher numbers, and then you also have an appreciating trend. You can see you have more buyers coming into the market. So if you're buying a house today, it's definitely a good thing to have somebody to sell to. You have an ever increasing crop of millennials and Generation Zs. So stop to share. So that's in a nutshell. Definitely a good time to buy. I know today pricing got a lot better, and it's going to come down. We still have those capacity issues we have to work through, but all's okay. You're buying a house; it's a great time to buy. If you're looking to refi, there's still some ways to save you some money. Maybe consolidate some debt. Lower your payment. It's still out there. And my guidance right now is to float in the better rates. So if your rate's over 4%, you definitely give me a call. Go to dempseymortgage.com. And thank you for my referral partners and clients for trusting us for your business. And take care of your families. We will get through this. I know I'm home with my kids all day. I love the reconnection time, but we will get through this. We always do. Stay strong. Of course, if you have any questions about mortgages or anything else here in town, need anything, definitely hit me up on Facebook, Instagram, whatnot. But thanks again, and stay safe. I'll talk to you soon.